Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 5th of February, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go for our usual regular run through here today. Calendars, what we've had, what we've got coming up, news wires, what are the macroeconomic, fundamental, geopolitical, the central bank events that are shaping financial markets right here, right now. And we will also take a look at some of the charts to see where the potential trigger points are coming as we go into today. Where's the general impetus for markets? One thing we want to point out is if you're probably aware of this, we put it all over Discord. It's been on the site since yesterday. So there's been an issue with Tradeovate. As far as I'm aware, this is continuing to happen. It's continuing to experience issues in both the treasury market and in the grains markets. What it means is traders are getting filled in unrealistic fields. It's like 67 bid at 72, and they're getting filled on the buy side down at 05. So all those trades are going to be busted, guys. They're going to be non-profit trades. You won't be able to benefit from it. Please don't trade it. It's not real market. It's in our terms and conditions. You can't benefit for when basically the software is playing up. You can't get fills outside the bid and offer. So please don't trade these markets until we give you the green light that they're good to trade. Because at the moment there's still unrealistic fills, and all we're going to do is reset your trading to the beginning of the day. So it's just kind of wasting your time. So please do not trade the treasuries or the grains until we give you the green light to trade these products. Okay, enough of the lecture. Let's get on with what we're seeing and what we've been seeing in here. Let's start. Actually, I'm just going to bump this back a little bit to where are we in here? I'm going to move it. Where are we? In here somewhere. Yeah, I'll move it to there. So the main thing we've seen in here really is the Google in here data yesterday. This is the biggest impact on markets right here, right now. So earnings per share beat. Revenue, though, missed in here. Markets were disappointed. If you have a little bits in their reports as well that upset markets. Markets down in post-market last night and pre-market again this morning, tugging the tech sector down, tugging particularly the Nasdaq down. So slight negative. It's not a super negative in here. And already the Nasdaq is starting to rebound already. So we've seen a dip and already seen a rebound. There's some articles on here. So US stocks futures falls, Alpha, AMD tumble. Now remember we mentioned AMD. That was already out. AMD numbers actually came in. I don't think it was out. No, it was after the as well. So AMD numbers, even though we're kind of beating expectations here on AMD, they are also lower. So US stock futures fall, Alphabet, AMD tumbling lower, so notably lower. So where are we in pre-market? Where is it? They say I think it was like 7 or 8% down last night in post-market. Not sure where we are in pre-market at the moment on Alphabet, aka Google, but that's weighing on the broader indices here today alongside AMD. And there's a few articles here: morning bid, Alphabet flubs, yen surges, China returns, and also China back, China and down in here this morning, having been on their Lunar New Year holiday. They're coming back, and we've had obviously all the chaos of tariffs. We've had all the chaos of both tariffs and DeepSeek since they've been off, and we look at Hang Seng in here this morning down about 1% on the return from their holiday. So significant losses there on overseas, plus on the pre-market due to Alphabet, all weighing on stocks in here at the moment this morning. Nasdaq futures lags, Alphabet, AMD slide after bleak forecast. So it's not only the headline numbers, it's also the forecast as well. So all of those are negative alongside the return of China reopening. If we look at what we got going into today, the main focus of today is going to be on the PMI data. So this afternoon, we get the S&P Global Composite, excuse me, and service data from S&P Global. So the US S&P Global Composite and service data at 9:45. That gets trumped, though. The more important data is the ISM service, which is non-manufacturing PMI data at 10 o'clock. So the market can and will likely move slightly on the 9:45 data. It's more likely to move more on the 10 o'clock data. Excuse me, guys. Let me just clear my throat. Excuse me. So 9:45 and then 10 o'clock. The 10 o'clock, the more important data that's coming up. Importantly, though, already this morning we've had, as you can see in here, the Eurozone data, and we also in here. If I go back to, actually, let me just dupe this out. and put in yesterday's, because it picks it up in yesterday's. In here, we see the Chinese PMI overnight has missed. Okay, the service PMI, you see a miss on the Chinese PMI. And then we go to the European data this morning. France missed, Germany, Eurozone in line, Eurozone miss, UK miss on the composite and service sector from S&P Global ACOB. So all of these in here either in line or worse than expected, on top of the Chinese data overnight worse than expected. So the PMI data globally negative. So that's helping tug in down European markets and Asian markets as well. So we've had basically a raft. Since last night's close, we've had Alphabet and AMD negatives. We've had Chinese PMI negative. We've had Eurozone PMI negatives. So the markets are down. However, they're hardly down. There's a slight dip and they're already starting to rebound. So I think it's actually, I'm a general bull anyway. You probably picked that up anyway. So I'm generally bullish a lot of the time on markets. That's kind of my default position, but I try to follow the technicals. And the technicals for me, even though we've dipped, we had a strong day yesterday. The market has dipped lower, but then it's rebounding already in here on the overnight. So for me, it's still pointing north, still pointing positive. So there's the headlines there. Eurozone business activity returns to growth in January. Yes, it does return to growth, but worse than expected. And on the China data, China's service activity grows at slower pace. So the case in PMI data showing. So negatives there. That's the looking back. If we go to the earnings kind of going into today, we've already had Walt Disney exactly matched on revenue, slight beat, a decent beat on the EPS, earnings per share. So a slight silver lining to the general cloud of what we've had so far in here overnight. That's the main data we've had come out through so far this morning. If we look at, let me just see in here, I don't know whether the Morning America has been updated yet. Let me just refresh this. I didn't see it. No, it hasn't. Daybreak Europe's up there. They haven't got the Morning America one in here at the moment. But nevertheless, in here, what we do have is China stock slide upon reopen as tariffs keep traders on edge. We've already spoken about that. And again, in here from Reuters, China stock kick off year of the snake with trade war. The AI rallies. Okay, and if we look at where we are, as I said in here, Nikkei is pretty much flat overnight, but having returned from the Lunar New Year, Hang Seng actually ends up down. European markets in here slightly lower in this morning, but relatively unchanged actually. We're a bit lower. They have rebounded. FTSE is actually up a tenth. DAX is flat, and the CAC is down a tenth in here. So actually, European markets holding and weathering the storm fairly well. Having had a positive day yesterday, we are down on the Nasdaq nearly 1% in here, but it is rebounding, and mostly due to the being pulled down by Alphabet and the S&P down 0.5%. But as I say, these markets are all rebounding, so turning slightly more positive going into the session now. If we look at yields, though, this is going to be something I think we should watch, though, given that we've got the rebound going on. Look, we're breaking into this zone I've been talking about for a long time. This zone sits between like really 440, 449 down to like 440. Well, the spike yesterday was 446 and a half. 2 days ago it was 446 and a half. So really we're kind of down. But if we close below, I think 449, 448 and a half in yield, this will be a significant statement that could see yields move significantly lower down into the low 440s in here. And if we move down towards the low 440s, that should generally be a positive. So I'm watching in here on the various markets in here whether we can get back above the spike highs that we posted back, I think it was on Friday, the spike highs from Friday. So watching those spike highs on the 30-year, 10-year, 5-year, we're getting back up towards us, and we can take out those spike highs, or in here in the case of the 2-year, the high that we posted in here at the end of January. If we can get above these levels in here, then it certainly opens up potential upside on the 2 years at 102.30 and a half, I mean, 102.30 and a half. So those are the potential upside targets. If we can clear above those levels, then I think it certainly looks more bullish for bonds. Bullish for bonds, lower yields are potentially pointing to higher stock prices. Looking at the stocks in here and our analysis in here, what you'll see is that we did see. So we filled the gap, remember, back on Monday. We had a big gap lower, tested support, rebounded, closed the gap on Monday. Then we did, remember yesterday, we dipped back kind of into that gap, even though it's closed. And then we were rebounding and continue that rebound back up to the Monday rebound highs yesterday on both the S&P and the Nasdaq. Now, yes, we have dipped back lower in here, but we're already rebounding. So staying with that positive tone. So you'll see in the Monday, that we had the big gap lower, like a gap down lower in here, rebounded and closed the gap. Yesterday we dipped and we rebounded and then took out, this is on the ES, took out the peak from Monday as well. And we've had a slight dip lower, but we're already rebounding. If I go to the 30-minute here on the ES, oh no, I did not want to do that. Let's pop this back out again. So on the 30 on the ES, you'll see we're already rebounding. So yes, we did back lower. So there's the here's the gap lower. We filled the gap, okay, filled the gap, and then dipped back into the gap yesterday morning, and then we came back up higher, and just about went back up to the highs in here from previously on Monday, and then we've faded back lower. And look, we're rebounding already. So I do think there's real risk back up to this kind of 60-70 level. And if we can take out kind of 60-70 in here, I think then there's potential significant upside. But we're obviously going to be watching for that PMI data. That could be the trigger. Just after the cash market open, then we get the S&P Global PMI number, and then 15 minutes later we get the ISM number. So kind of in quick succession, within 30 minutes of the cash market open, we get cash market open. 15 minutes later, then we get the S&P Global number, then we get the ISM number, all PMI numbers. And I think that the combination of those three could see us easy pushing up, challenging this 60-70 level on the ES, and then up through 60-70. It certainly opens up significant upside potential going into today. Similar story with the NASDAQ, even though you look, so we gapped lower on Monday, we held way above these supports, rebounded, closed the gap. Then yesterday we dipped down. Remember, we were already rebounding. We dipped down, so was basically back into the filled gap, and we'll see that on the 30-minute. Made new highs above the Monday highs yesterday on Tuesday, and we've dipped lower, obviously getting hit with the Alphabet news in here, but already rebounding. And we'll see this on the 30-minute in here. There's the gap from Monday, filled the gap, and we dipped back effectively back into the gap. You look here, and we were looking at this yesterday. We were already starting to rebound, and you got a solid rebound, and the market accelerates back higher. And then we kind of fail in here. We've got the sell-off, and then look, already rebounding. I think the real risk is we push back up to the peaks in here from yesterday around 21,700, okay, and through 21,700 could even open us up back up to here, back up to the peak from last week. But certainly targeting that 21,700 level and potentially higher going into today. So it's all shaping up to me fairly bullish, even though we've had this dip in here. I think this dip, you won't see a significant sell-off in the broader market because of Alphabet. It will take it in its stride. You might even see dip buying coming in on Alphabet stock, and then on that dip buying on the cash market open, post the S&P Global, then the ISM PMI, both those sets of PMI data. I think they could be the catalyst for a next break higher in here. So staying bullish in here. If we start to undercut the overnight lows in here, so the lows that we've just posted, if we start to undercut the lows here on the NASDAQ below 21,430, 420 kind of area, and on the ES, if we undercut the low in here from overnight, so around 60.20, if we start to undercut those lows, then we could certainly challenge back up to these lows in here that we posted on Tuesday. But at the moment, I think things are still looking bullish. I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and we'll be back with you with another bull versus bear webinar tomorrow. Bye.